What's up YouTube, it's Louis here. The last time I left you off with the quant update, I told you about this specific pattern. If we were holding $83, we could be seeing a head and shoulders that takes us back to the all-time high. We're going to discuss this in today's video, and if you appreciate that, please leave a like, subscribe, comment, and share the video over on Twitter. My Twitter is in the link down below, but it's Louis_crypto. Just need to add an underscore. Let's get on with this video. So the last time I made a video, 2 days ago, I basically said for us to stay bullish, we need to hold this $83 support, because if we're losing this and we're validating this M pattern, remember, to validate this M pattern, you need to close below the neckline. You need to close below $87, and you can see we did not get that. So if you did close below $87, you would have actually validated this one top, this being your neckline, and this second top over here. So that would have been the M pattern with a target back to this previous double bottoms neckline, because again, we've never retested it. When we broke above it, we never came back for support. So again, if we do now fail to break this high and validate this potential right shoulder, yeah, like this, we need to do something like that and break the resistance. We'll draw you out the perfect neckline. Let me just get rid of the EMAs for now. They're a bit in the way. Let's just look at price action for what it truly is. And we can see that, yeah, we did lose this support and we've reclaimed it, confirmed it as support again. Head to resistance, because it's resistance, you get a reaction. Head to support, because it's support, we should hold it as it's the bottom of the market. That's what support means. So if we lose it, it's not the bottom. We go to the next support over here. And if that doesn't hold, then we go to the next support over here. That's why I've been telling you guys, the key level that we must stay above to keep quant bullish is $50. But if we're losing 83, that is when you start to head towards 50, basically. If we remain above 83, that's not even a thought in my mind, seeing 50. It's not a thought in my mind as long as we're above 83. And that's what we're seeing with this pump that is now currently up in and around from the low in the last 3 days. We are now up 21%. That's insane. Going up as high as 23%. Wow. Absolutely insane for quant. Make sure, if you're not in quant already, to go check it out and read up about it if you're not aware of what it's about. So I'm going to draw you this neckline out of this head and shoulders at the moment. Just like that. Perfect. Okay, that is your neckline for the head and shoulders. This is the level you must actually break if you want to see this continuation to the upside. Really do apologize for that. I have no control over that. I should have closed the windows, but sorry about that, guys. Crazy people on my street. But what we need to do going forward is attack this and break above and close above in and around $125. I'm so sorry about that, guys. Got no control. But yeah, we need to close above $125, hold that as support to validate the pattern's target. Again, this pattern's target is all the way back to the previous all-time high. If you're actually breaking above there, it depends where you break. As you can see, it's descending, so the longer you take to break out, the smaller the target becomes, because obviously if we were to break out, if we went in a straight line right now, your target would be 426. But the longer we take to actually break out, you can see this is reducing the target. So that's why I'd rather just say in and around the previous all-time high, and that's if this pattern is validated. But I want to bring you guys attention to it if you missed the last update where I spoke about this potential target. Of course, we've already spoken about the downside, where the level we want to hold above is 83. If we're not, we're going to head towards 60. But because we never confirmed 60 as support, you could fall through it, and the level we can't afford to lose whatsoever is 50. If you don't want to see 50 or 60, don't close below 83. Close below 83, you're going to see 60 and 50, potentially 50. But as long as we're above 83, we're not seeing 50 or 60, and we're above 83. We're now at 105. Wow, guys, what a turnaround in the last few days. An over 20% pump in the last few days. And if we want to see continuation, personally, the level we all know that needs to be reclaimed is this bear market level, $130 to $150. I'm more focused on $150. Don't forget, in the future, this will be a level of resistance going forward. Even if we do validate this target, it could do like a, yeah, it could take a long while to get up there, guys. Don't think that it's going to get over there overnight or in a few weeks or even in a couple of months. No, it's going to take a long time. We could even be trapped in here for a while. This could all be fake. We roll over and lose the lows. So step by step, I'll be able to tell you guys what is actually going on in this market. But right now you can see that we're holding this $83 support, which is this higher range low, range high, and we're no longer in this range below over here. We got in the range above, which is bullish. It's like a stepping stone. You were down here and you've gone up one level. Let's level up again and go up another level. And that's where I can say, guys, we're no longer going down if we continuously hold 130 to 150 as support. But until then, there's that risk we do go down, and that's why I've prepared you for that, because of the risk. Because we're bearish, there's that risk, long-term bearish. And when we're long-term bullish, there's not many risks apart from a dip, but we know dips recover. The way I've been looking at the market with you guys since November, this is a more cautious approach. This is how you should be approaching the markets, looking at it both ways. When we're bearish, when there's uncertainty, when you take a bullish trade and it goes up a little bit but flips back on itself because of the manipulation, because we're in a bear market, because bullish patterns may only work in the short term and not in the long term. You could also enter shorts and they not work, and them not work out. For example, the clearest of example is Quant made a lower low lower than this, so you'd expect continuation lower, and it just didn't do that. So when we're in a bear market, there's a lot of manipulation. When we're in a bull market, there isn't as much. You're going to see patterns playing out a lot more often. So the approach that you guys have been seeing me do on this channel for the last, whatever, 9 months now, 9 to 11 months now, since November last year, you need to realize it's a much more not laid back approaches for the bull market. But yeah, it's just Hawkeye time, hawk eyes on the market for the last 11 months. We need to know if it's going to go up or go down, prepare for the scenarios because of the manipulation, because of the uncertainty in the market. When we're in a bull market, there is certainty that we are constantly going up, up and up and up, and every dip should be recovered 2-3 months down the line. You buy it, it goes down, 2-3 months later you'll be higher than where you bought, even though you just experienced a 40% dip, for example. That's the beauty of crypto. But exactly, my approach in the last 11 months is how you treat a bear market. When we're bullish again, you're going to see a much more relaxed approach. We're not going to worry too much of, oh, it could go, if you lose this, we're going down. If you're breaking above this, we're going up. We're always going to constantly go up, no matter the dip. But here, yeah, we have to have laser eye focus, hawk eye focus on the market, and always be prepared for all scenarios. So I can't wait for the laid back approach. That's going to come when we're finally bullish. But again, don't get bullish right now because we're still under that bear market level of 150. Just be prepared. As long as we're holding $83 and we can actually close above in and around 120, we could see this head and shoulders validating back to the previous all-time high of around $400. And again, really, if you do want to see this, we need to attack 150 to confirm, yes, we're 100% going to try and actually start heading towards this target. Again, apologies for that. Don't know why these crackheads in the street are doing this. But if you appreciated this video, like, subscribe, comment. I do have the course where I teach you all of this. That's only £250 for a limited time. Over on my Twitter, just message me there, Louis_crypto. Will get you started with the course. But we also have 2 slots available with for the mentorship, still at the $650 price. Once these 2 slots gone, the price is increasing again, just as the course. Thank you guys so much. I'll catch you in the next one, and as always, peace.